You stop writing. I want to explain, then you write afterwards.
Okay.
So we continue with chapter 4, business ownership. Stop writing, please. We continue with chapter 4, business ownership. Today we're going into the nature of business ownership. The nature of business ownership. What about nature of business ownership? We're simply talking about the structure, how the legal structure of the business is, who pays taxation, who controls the business, and how is profit being shared. Please focus here. What is worth doing at all is worth doing well. If you are here, it's better you be here. We're still on business ownership. Today we want to talk about the nature of business ownership. I want to talk about the nature of business ownership. We're simply talking about the legal structure, how taxation is being paid, how profit is being shared, who controls a business. That is the nature of business ownership. So I wrote, this implies to how a business is legally structured, how it's being put together, impacting liability, who pays who in terms of debt, taxation, how do you pay tax, control, who make decision, and how is profit being shared. That is the nature of a business ownership. Do we understand business ownership nature? So what are the factors that determines the business ownership? What are those factors that determine ownership of business? The first one we're going to talk about is formation. When we talk about formation, we're simply talking about the cost. You think about setting up a business. The first thing is, how much is it going to cost you to start the business? Yes or no? Yeah. Do you understand? How much is it going to cost you to start the business? That is the first thing. Which is what? The cost of setting up. Then after the cost of setting up, who are those that are involved in setting it up? That is what formation is about. Do you understand formation? Better be here, please. Do you understand what formation is here? These are the factors that determine the ownership structure options we have. What kind of business do we want to run? Is it sole trader? Is it partnership? Is it limited liability company, either public or private? What determines it? These are the things that determines the kind of business we set up. The first one is what? The formation. How much is it going to cost us to start the business? Who are those involved in starting up the business? Formation. Do you understand formation? Do you understand formation or not? Formation simply implies to who are those involved in the business and how much is it going to cost us. This is one factor that determines if we are going to set up a sole trader, a partnership, or a limited liability company. The second one, liability. Liability simply means debt to the third party. So how much debt are you willing to accept as the owner of the business? So the amount of debt you are willing to accept will determine if you are going to be a sole trader, a partnership, or limited liability company. If you are thinking of not paying debt at all, it's better you go for a private or public limited company. That means whatever happens to the business, it does not affect you. So the kind of liability you are willing to accept will determine the ownership structure you have. Do you understand liability here? Liability simply means debt to the third party. So how much debt can you accept will determine if you are going to go for a sole trader, a partnership, or a limited liability company. The third one. So for limited liability company, we have limited liability and unlimited liability. Why do we call it limited liability? We call it limited liability because whatever happens to the business, it does not affect the owners of the business. That means the personal wealth. So the debt of the business will not affect the personal wealth of the owners. That is limited. But if it is unlimited liability, whatever happens to the business affects the owners of the business. Do we understand liability here? Do we understand liability or not? Liability is debt to the third party. There's limited liability, there's unlimited liability. For limited liability, it means owners are not personally responsible for the debt of the business. So whatever happens to the business, the owners will not be the ones to pay the debt. The business will pay. That is limited liability. But for unlimited liability, it simply means the owners will be the ones to pay the debts of the business if the business is unable to pay. Do you understand liability now? For liability, do you understand, please? Do you understand? For liability, we have limited and unlimited. It is limited because the owners are not responsible when it comes to the debt of the business. The business has to sort itself. But unlimited liability, the owners are responsible for the debt of the business if the business is unable to pay. Clear? The next factor is finance. You can't set up a business without finance, yes or no? Can you set up a business without finance?
No.
Can you? No, good. This applies to the ability to raise capital, which is the money you use in starting up the business, to attract investors. If you are inviting people to start, to invest, to put money into the business, and how to obtain loans from financial institutions. So your ability to get money, to source for money, to source for funds, will determine the. Can you just stop that already? Your ability to source for funds will determine the kind of business you can run. If you cannot source for so much fund, that means you have to go for a sole trader. And if you think you need more from people, then you go for partnership. If you think you need more than that, you can go for a limited liability. So your finance will determine the kind of ownership of your business. Do you understand finance? The next one is control. The level of control the owners maintain in decision making. So how much control do you want to have in the business? Do you want to have the full control of the business? That means you have to be a sole trader. Can you share the control? Can you make decisions with others? Can others be part of your decision making? That means you are going for partnership. So the kind of control you want to have in decision making will determine the ownership structure you choose. Do we get it?
Yeah.
The next one is separate legal entity. Do you want your business to be different from the owners? If the business, you don't want the business to affect you, that means you have to think about the limited liability company. But whatever happens to the business that you are attached to, it is what unlimited liability. So that means you don't have a separate, the business is not different from you. If you want the business to be distinct from you, it means you have to go for a limited liability company, like private limited or public limited. But if you don't care, if you want the business to be known with you, that whatever happens to the business should affect you, that means you go for a sole trader or partnership. Do you understand control? Separate legal entity here.
Yes.
Separate legal entity simply means the distinction between the owners and the business. If the business and the owners are together, that means you cannot distinguish between the owners of the business and the business. We call it unlimited liability company. But if you can differentiate between the owners, if you can distinguish between the owners of the business and the business, it is what? A limited liability company. So that can also determine the kind of business ownership you want. And the last one is taxation. Businesses have to pay taxes. So the kind of tax you feel like paying, the kind of tax you are willing to pay might determine the kind of business you run. For sole traders and partnership, they pay income tax. But for limited liability companies, like this school, they might pay what? Corporation tax. So income tax is tax on income. So I pay income tax, sole traders will also pay income tax. Partnership businesses will pay income tax. And income tax are lesser in terms of percentage compared to what? Corporation tax. Corporation tax are paid by limited companies. So the kind of tax you are willing to pay might also determine the kind of business ownership you are willing to open. Do we understand? So these are the factors that determine the business ownership options you have available. Sole trader, you check the options. Partnership, you check the options. Limited liability companies, you check the options. Public limited liability companies, you check the options before you make your decision. So these are the options available. These are the factors that determine the kind of business ownership you want to have. Any question about it? Do you have any question?